Gold surged in financial 2025, shining a light on undervalued developers like Theta Gold Mines, ASX code TGM. With over 6 million ounces of high-grade gold in South Africa and production targeted for late 2026, Theta Gold is backed by strong fundamentals but still trades at a discount. Today we speak with Executive Chairman Biil about how Theta plans to close that valuation gap and unlock the full potential of its flagship project. Good morning, Biil. Thank you for joining us today.
Thank you, Hannah. Great to be here.
Firstly, let us get to know Theta. Could you briefly introduce the company and what makes it stand out in the gold sector?
Yeah, sure. Theta Gold Mines is an emerging gold producer targeting production, early 2027. We've got a shovel-ready project. We have scalability, and we offer scalability and value. So in terms of scalability, we have a large high-grade resource of 6.1 million ounces spread across 620 square kilometers, 43 historical gold mines. So we dominate and control our own gold field, which is great. And, we have done a number of studies that show that the first 4 mines in our feasibility study, offer strong cash flows and good returns for the investor. So, I feel we're in a really great space now, and the plant and the first 3 mines are fully permitted.
Looking back over the past 12 to 18 months, what have been the most meaningful turning points for Theta?
Yep, sure. So basically, during those last 12 months, we've completed the permitting of MR83, which is our main mining lease. Historically, we've kept this ground intact now for 130 years. So with another 13 years on top of that, we get the 2038. So we've got, a long time to deal with the gold that's there. That lease is fully permitted in terms of the plant as well. So we're shovel ready. Was a major de-risking turning point for the company. We've also been offered a $35 million term sheet from the IDC there as a cornerstone debt lender for the project. So we're reducing that capex risk and exposure as well. And we've also completed our pre-development activities. So we've basically decommissioned the old plant, and we've also finished our final design and engineering packages. So what that means is for every piece of equipment going into that plant, we now have between 3 to 5 quotes, and we know exactly what it's going to look like and what's required. So, we're ready to build, basically.
The TGME project holds over 6 million ounces of gold. Can you briefly break down the resource and explain what makes it technically attractive?
Yeah, sure. So 6.1 million ounces under management at a grade of 4.17 grams per ton. So it's good grade. 4.5 million ounces of that is underground resource. About 1 million ounces of that underground resource is under JORC 2012 indicated and measured. And generally, that underground resource, the reef grade of that resource is between 14 to 16 grams a ton, so very high reef grade there. In terms of the mining schedule, we've got about 1.2 million ounces in the current mining schedule for the first 4 mines. And then we also have an open pit resource of about 1.4 million ounces. In terms of geology, it's quite unique. This is a large sedimentary hosted deposit. It's very close to the Bushveld complex. The Bushveld complex is the richest metallogenic province on Earth. It's hosts the most platinum, hosts vanadium, chrome, etc. So that large igneous mass, the last thing to come out of it as it cools down is the gold. So the gold was pushed into our large carbonate basin, forming large sheet-like reef systems that are stacked on top of each other. So they have a gentle slope between 3 and 7 degrees, so we can mine them very cost effectively. We don't need spiral declines, we don't need shafts, we just follow the reef down, and that means we're always making money because we're always taking some gold during our development of our mine. So, it makes a very cost effective project to develop, and a very exciting project as well.
Thank you. The 2022 study showed a 13-year mine life and 80,000 to 100,000 ounce per year output. Is that still the plan, or has it changed?
What we're doing now, because of the high gold price, when we first did the feasibility study, it was 1642. Now, obviously, gold's running around 3,000 plus. So what we've done is we've taken some of the surface gold we had on the surface from history. So we have tailings dams and rock dumps. There's 174,000 ounces, sitting on the ground. We'll probably add about 50,000 ounces from that into the new mine schedule. We'll update that mine schedule and feasibility Q3 this year. So, that'll be a very exciting time for the investors, to see the new project numbers and how the gold price has affected the project. We probably expect to add another year of mine life to the project during when we update that feasibility study, and we'll be doing other bits of optimization as well to get those project economics as best as we can.
What work is currently underway on site? Are you on schedule to begin production by late 2026?
We think production will begin around early 2027. So the on-site activities are really focused on the gold plant build process at the moment. Recently, the surveyors have just been to site to mark out the bulk earthworks. We're going to build 5 different terraces there, so that's been marked out by the surveyors. The bulk earthworks contract is in progress. We expect to see those bulldozers on site Q3 this year, so not very long now. Team's also taken delivery of excavators, telehandlers, cranes, trucks, dump trucks. The board has authorized that so they can get on with their work in building the mine, which is very exciting time for the staff. They're very excited to have all this new equipment on site and, doing their work because they're all miners and they want to go mining. And we're also in the process of completing civil contracts for the next round, Q3, Q4.
The 2022 PFS estimated $77 million capex and AISC of $834 per ounce. Will the Q3 update show big changes?
Yeah, sure. So the last feasibility study used the gold price of 1642. So obviously that looks very low today. So we are expecting some significant changes in economics. So, gold's now 3,300, 3,400. So with inflation and stuff, we expect that sort of capex number to peak. We probably add another 10 to 15% on that capex number. So probably go to sub $90 million USD. The all-in sustaining costs are a very interesting one. So there will be some inflation on that since 22, but also because the project's so much more profitable now in South Africa, there's sort of like a sliding scale for royalties. So that will go up to between sort of 1,000 US to 1,100 US. But that's just because the project's so much more profitable. So we're expecting big improvements in free cash and NPVs and all those things because we know from the 22 study that the project is gold price sensitive.
With the $35 million IDC facility and deferred EPCM terms, how has your funding flexibility improved?
Yeah, a great question. So the IDC term sheet was obviously a big cornerstone debt provider for us, great vote of confidence in the project, and it has increased our capital flexibility. And it's also shown a strong signal to the market that the project's viable and can pass a very rigorous DDD process. IDC has been in business since the early 1940s and has been basically invest only in the African continent. So very familiar with African projects. The company has received the delayed payment terms for a number of key pieces of equipment, which is also, reduces our immediate need for cash. So, we're always working on that flexibility and getting those funding packages together, which we expect to have completed by the end of the year. But, the flexibility is also very important.
TGM trades at a big discount on EV per ounce. What could drive a re-rating?
So basically, I think what the market's really waiting to see now is our updated optimized feasibility study. So that will be at a contemporary gold price, sort of around that 3,000 US dollar mark. So, people have a real sense of the project economics at that point. Also, that feasibility study includes final designs and drawings. So, we will have very tight capex numbers at that point because everything's already been quoted now. Well, finalizing the funding of the debt packages toward the end of the year will also give the company a re-rating, I think. People see the project's fully funded, gets people excited. And But all the time while we're doing that, we're also progressing the plant and mine build construction phase of the project. So we'll be doing those bulk earthworks and the civils as well. We expect, so, once we've completed the civils and the bulk earthworks, we're only 12 months from being able to produce a gold bar, because we build the plant modularly. So everything's built in the factory and trucked to site, so it can be put together very quickly.
With gold price staying high, do you see growing investor interest in African gold projects and a potential re-rating for South African developers like TGM?
Yeah, I think that's very interesting. The Australian investors are always very keen on West African projects. So I think, Australian investors do have appetite for African projects. I see Southern Africa, South Africa generally has pretty stable governments and countries. South Africa is very, very stable. Zambia, Namibia, all very stable, politically stable countries. And we're also seeing a bit of change on the ground in South Africa. It has a very, very young population. So the population tends to be around 30 years old. And, in the first time in South African history, in 30 years, they've voted for a coalition government. So, the youth is really voting for government now that is good for them, as you would expect in a democratic country with, and it also has English law as well. So it's very easy for, Australians to transition into South Africa, because at least you can understand the laws as well.
The feasibility study outlines a potential expansion to 160,000 ounces per year. Is that part of your midterm plan?
Yes, that's very important to us. We have a stated goal of trying to achieve 160,000 ounces a year within 5 years from production. So the plant is designed, like I said before, modularly, so it can grow with the project. So if we think about the plant, currently it's rated at 45 kilotons a month. If we want to get to 160,000 ounces a year, we have to get to about 180,000 kilotons a month. So we add a secondary crusher to the crushing modules. We add 2 extra thickening tanks, and effectively the sulfide circuit, and then we're already at 160,000 ounces. So that's already planned and costed, and we know how to do that. And the plant definitely has that capability. But the plant, if we look at the elution circuit of the gold plant, it's already rated to 90 kilotons a month. So we do have visions of actually doubling that plant capacity to potentially get to 200,000 ounces one day. So yeah, we want to grow internally, grow the value for the shareholders. It's a big project, a big gold field. There's plenty of metal in the ground.
Where do you hope to see Theta Gold in 2 to 3 years in terms of production, cash flow, and market visibility?
Yeah, I really want to see Theta producing gold bars, obviously, and good cash flow, around the sort of 100,000 ounce mark we've talked about in the first few years. We want to be a sustainable producer. We want to be a good steward for the environment and for the community. We have to be part of the community, and we have to uplift our local environment as well. We want positive cash flows in terms of production. But what I personally would like to see also is us to really get back on the exploration horse again and start to demonstrate, what this ground can do. Because of the large sheet-like nature of the ore bodies, it takes a lot to drill them out. But, we think some of our best mines aren't even in our JORC table yet. So we have a mine called Desire, very exciting mine. You can walk under there for a couple kilometers underground. We don't even have that on for 1 gram under our books. We think that eventually that will be actually one of our biggest mines. So, once we're in production, I really want to see Theta ramping up those exploration and showing people how big this gold field can be.
Are you open to acquisition, joint ventures, or partnerships to grow the portfolio?
Yeah, I think the board will always look at any opportunity as it comes along in good faith, anything that really adds value for the shareholders. But I think, in terms of that good faith with the shareholders, really what we're promoting now is that we want to build the gold plan and get mining and producing gold bars. So that's really our main focus. But, as opportunities come along, we would examine them. But, really we're focused on building the gold mine at the moment.
26% of the project is owned by local trusts under BEE rules. How has this helped project progress?
That's a good question. Yeah, so basically the host communities are very important to us. That social license in mining to me is one of the most critical things you can have, because really it's about the long-term sustainability of your project and the de-risking of the project. You know, if the locals don't want you, you're in a lot of trouble. So our local community calls it their mine. They have direct project ownership. They have helped us with the regulators in the permitting process. Some of the community leaders have attended meetings with the mines department and the forestry departments for us to, you know, help our case to show, you know, the regulators that they want this mine, that they want the mine to be part of the community. You've got to remember too, this was an operational mine, you know, 15, 20 years ago. So a lot of these people, they have a very deep understanding on mining and what it brings. So yeah, you know, the community is very supportive and a very powerful force for the company.
What's your ESG approach at Theta? Has it helped with community or regulatory support?
Yep. So we're focused very hard on the educational front with the local community. So we support free teachers at the local community. We pay their wages at the school. We supply photocopiers. The guys will, if something breaks at the school, the guys go down and fix it for the teachers. You know, whatever we can do. This has obviously built a lot of goodwill with the community and the parents and the locals, which has been great. But with the regulators and the farmers, what is really driving our relationship is our environmental offset program. So Theta has factored into its financial models this offset program to help rehabilitate the local river system. We know from our studies that the local river system is under a lot of pressure and not performing well. So by rehabilitating the local river system, you know, we have more water into the environment. That means more water for the farmers, because our river flows down to Oliphant's Dam. From Oliphant's Dam, it flows out into nature reserve areas. So more water for the animals in the environment as well. So Theta is always very conscious of, you know, delivering more than it takes. So we will actually, in the long run, you know, in 3 to 5 years, will deliver more water to that river system than we actually take away. So, you know, that will be amazing achievement if we can get that done. And that will be done in combination with forestry, agriculture, and tourism and local industry. So we're actually going to form a forum so we all act together to benefit the river.
Thank you so much for your time today. This is the end of our interview. Thank you for your time today, Biil.
Thank you, Ariana. It was great talking to you.